Hello student, welcome to the YouTube channel of Northeast Junior College. Today we are going to do a sum where full consideration is payable in cash by installments. Now, sometimes a company may collect its money in 2, 3 or 4 installments. Okay, let's see the question. ABC Company Limited issued 20,000 equity shares of ₹10 each at par, payable ₹2 on application, ₹4 on allotment, ₹2 on first call, and the balance ₹2 on second and final call. The shares were fully subscribed and all the amount due was received. Past necessary journal entries. So this is our question. ABC Company Limited issued 20,000 equity shares. Now 20,000, this 20,000 is the total numbers of shares that a company has issued. Equity shares, this is the class of shares. Equity shares is the class of shares. Of ₹10 each, the rate of the share is ₹10 per share. At par. Now, at par means where shares are issued equivalent to its nominal value, that is its face value. Payable ₹2 on application, ₹4 on allotment, that the company has collected ₹2 on application, ₹4 on allotment, ₹2 on first call, and the balance ₹2 on second and final call. The shares were fully subscribed, means all these 20,000 shares were fully subscribed by the company, and all the amount due was received, and the company has received all the amount that was due for the shares. Past necessary journal entries, so you are required to pass the journal entries. So first of all, you should read the question carefully, understand the question, and mark the important point. Here, numbers of share is number of shares equal to 20,000, and this is equity shares. Now, and the rate is ₹10 per share. Okay. Now, ₹2 first installment. First installment, ₹2. So, first installment money is known as application. Here also written application money. Application. Second installment, ₹4. This money, second installment money, is known as allotment, as also given in your question. Allotment. Now, ₹2 on first call. Third installments, that is our ₹2. This is the first call money. Fourth installments, that is ₹2. This is our second and final call money. So, company has made 4 installments. First installment money is known as application. Second installment money is known as allotment. Third installment money is known as first call. And the fourth installment money is known as second and final call. And the amount on application is ₹2, on allotment ₹4, on first call ₹2, and on second and final call rupees 2. That is 2 plus 4 plus 2 plus 2, 10. See here 10 at par. Now this is our question and you should note these two things. First of all, the numbers of shares, its rate and the various money on installments. This is the format of journal. So in journal format, you know well that first column is the date column, second is the particulars column, then ledger column, then debit and then credit. Now first of all, you should write in here the name of the company in the books of. So in our question, the name of our company is ABC Company Limited. Then below this write journal. Now in our question, date is not mentioned, so no need to write date. You can put question mark or you can give serial number 1, 2, 3 like this. Okay. So first of all, company has received application money. That is, when a company receives amount, cash or bank enters into in. That is, bank cash comes in. So bank account debit. Now what is the numbers of our shares? 20,000. And what is the amount that the company has collected for application? That is rupees 2. 20,000 numbers of shares is multiplied by the amount collected for application. 40,000. 40,000. So bank account debit 40,000. Next, 2. What we will going to credit? We will credit to equity share application account. Equity share application account. Now see, equity share. This is the class of the share. Equity share. Application. The amount so received, it is 40,000, is against application. This is the application money. So we have credited to equity share application account. And amount would be 40,000. So this is our first journal entry, that the company has received application money. Bank account debit to equity share application account. Now write narration. Being equity share application money received on, so what is the numbers of share? 20,000. 20,000 shares of rupees 10 each at rupees 2 per share. So this is our narration. Now next journal entry. Now we will transfer this application so money received to the equity share capital account. So equity, the second journal entry is equity share application account debit to equity share capital account. So amount is 40,000 Now see, this application money which we have credited in our first entry, now we have debited this one and we have transferred the application money to the capital account, so that in my previous journal entry we have debited equity share, we have credited equity share, so this credit and this debit will be cancelled and remaining will be bank account debit to equity share capital account. So we have seen that we have transferred the application money to share capital account. Now we will going to write narration. After every journal we should give narration. Now being application money transferred to the share capital account on 20,000 shares of ₹10 each at ₹2 per share as per board's resolution number. So in our question there is no resolution number, so no need of writing resolution number, just put dot. As per board's resolution number dated ... So this is the transfer entry, that is the application is transferred to the capital account, to the share capital account. Now our next entry will be allotment, for allotment of money. Equity, this is our third journal entry, equity share allotment account debit. Now numbers of shares is 20,000 and the rate of allotment, that is ₹4. Company has collected ₹4 for allotment, 80,000 to equity share capital account. Now this entry means that the company has called the shareholders for paying the allotment money, that is the company has allotted the shares to the shareholders. Equity share allotment account debit to equity share capital account. So this is the due entry, being allotment money due on 20,000 shares of ₹10 each at the rate of ₹4 per share as per board's resolution number ... dated ... So in this journal entry we have seen that the company has made allotment money due. It is the allotment money is due for the company, that is equity share allotment account debit to equity share capital account. Now in next entry the company will receive the allotment money. So when the company receive money, then bank will be debited. Bank account debit to equity share allotment account. So what is the amount? 20,000 into 4, 80,000. 80,000. So this is the fourth journal entry, and in this entry we have seen that bank has collected the money against equity share allotment. This is the allotment money that the bank has collected from the shareholders. Narration, right narration, being equity share allotment money received on 20,000 shares of rupees 10 each at rupees 4 per share. Clear this entry? So this is the fourth journal entry. Now the company will make first call to the shareholder. First of all, the company the shareholders has made application, then allotment, now call. Equity share first call account debit to equity share capital account. Now what is the numbers of our shares? 20,000 and first call money is rupees 2. Numbers of shares multiplied by the amount received in first call. 40,000. So the narration is like the previous one, being equity share first call money due. It is the due entry. Due on numbers of shares 20,000. 20,000 of rupees 10 each at the rate of rupees 2 per share. As per board's resolution number rated ... So this is the first call entry. Now after that the company will receive the amount of first call money. In our question it has given that the whole money, all the shareholders has paid their money. So next entry is bank account debit. So numbers of shares 20,000 and amount of first call rupees 2, 40,000 to equity share first call account. The amount so received by the bank is against equity share first call money. So we have credited equity share first call and we have debited bank account. Bank equity share first call account amount is 40,000. So narration will be being equity share first call money received on numbers of shares 20,000 shares of rupees 10 each at the rate of rupees 2 per share. So this is the receipt entry against equity share first call. Now our last entry is equity share second and final call. So the company will make call to the shareholders for paying the second and final call money. That is the due entry. We will pass now the due entry. So the due entry is equity share second, and it is the last, so we will write like this: equity share second and final call account debit. So what is the amount that the company has collected for the final call, second to final call? That is rupees 2. No, rupees, it is rupees 2, and the numbers of shares is 20,000 into 2, 40,000. To equity share capital account. This is the due entry. Equity share capital account 40,000. Right narration being equity share second and final call money due. Don't forget to write the word due. Due on 20,000 shares at the rate of 20,000 shares of rupees 10 each at the rate of rupees 2 per share as per board's resolution number dot dated. So this is the due entry for share second and final call. After the due entry, the company will receive the amount against share second and final call. So in our question, it is given that the company has collected whole money, that is the shareholders has given whole money against the second and final call. All the shareholders have paid their second and final call money. So now we will give the receipt entry. So receipt entry is bank account debit. Numbers of shares 20,000. All the shareholders have paid. So into 2. 40,000 to equity share second and final call account. So the amount so received by the bank, by the company is against second and equity share second and final call. 40,000. All the shareholders have paid their shares money. Being equity share second and final call money received all 20,000 shares of rupees 10 each at the rate of rupees 2 per share. So this is the solution of our question. So student, we have seen how the various installment money is collected by the company through journal.